to both of you, gentlemen. Very keen to hear your thoughts on what we just heard here on AI and this critical new frontier. Guillaume Lesage, you are Amundi's Chief Operating Officer. It's great to have you with us, as well as you, Barry Glavin, you are Head of Equity. So let me start with you, Guillaume, for the overall picture here. As CEO of one of the world's largest asset managers, how do you think AI is currently transforming the investment and savings ecosystem, and what changes do you foresee in the near and maybe medium-term future?
Those who know me know that for long I've been an advocate of efficiency in the financial industry. Amundi has a cost-income ratio of 53%. Our IT represents 6.5%, where the market is at 15%. So do I care only about efficiency? No, but it's central. It's central. So I fully agree, and even if I fully agree with what was said about the transformational changes discussed, I think we should not overlook the immediate benefits sitting before us. And I see three levels. The first one is the large impacts on efficiency across all parts of the value chain. The second is the incredible changes in the way we manage information workflow, and especially unstructured data. And then, but in a second step, and only in a second step, the profound changes in our processes and how we lead them. So AI will undoubtedly increase productivity, profitability. It will enable for our industry a new level of scale and growth with much lower growth of costs. So we all have been impressed by the speed of change up to now, and that was the subject of many discussions. I'm convinced it will accelerate. I heard the word exponential. And I see four domains to start with: software coding, reporting, financial analysis, we spoke about that, client deliverables. And on some of those domains, improvement can go to 40%. So we will see the world change in years, not in decades. And like Uli said, we do not have time.
Thank you very much for that. So Barry, now let's zoom in. Based on the insights shared with Guillaume, what sectors or companies do you think will most benefit from this AI revolution?
I think this was discussed at previous panels also, but the interest and the hype in the stock market, if you like, is focused around a very narrow group of stocks and certain sectors. And I think what we've discovered in the conversations this morning and yesterday is that actually the real opportunity is much broader. And across the whole market, across industries, sectors and companies, there's a massive opportunity for companies to unlock new opportunities, accelerate growth, reduce costs, enhance efficiencies. And often in sectors where there is no premium for this exposure to this theme. So in the pharmaceutical sector, which trades at a discount to the market, Fabio discussed this earlier, companies are making huge strides in terms of the acceleration of drug development times, in terms of improving diagnostics, in terms of enhancing patient outcomes. And this will have a real benefit to the bottom line of these businesses. In the financial sector, we discussed the opportunities at the previous panel, but right the way through from de-risking businesses in terms of fraud detection, etc., to enhancing the customer experience, to improving operations, to generating insights, huge opportunities for companies across the financial sector. And in manufacturing, where already we have decent levels of automation, the opportunity to enhance that automation, to improve things like predictive maintenance, to enhance supply chain management, etc., all provide ways for traditional companies that are non-hype, they're not overvalued, they're not expensive securities, but they have a huge earnings opportunity around the deployment of this technology, and I think they're areas where investors should look.
What's surprising here, as pointed out by you, Guillaume, is the speed of it all. It's how quickly AI is transforming businesses, but also whole industries. So how should investors position themselves?
Well, I mean, so far a lot of the AI stuff has been focused around a very narrow set of stocks, and we would say areas like the tech providers and the tech enablers have generated huge sponsorship in stock markets. And on the tech provider side, it's clear that this is a really large profit pool and growing very, very fast, and companies are spending hugely on CapEx. So those companies that are providing semiconductors, data center infrastructure, whatever, are making enormous profits, very high margins, and enjoy really high market shares. And I guess the challenge for investors in this area is that the valuations are really elevated. So you have a valuation challenge, and then you have to ask yourself the question about the sustainability of profitability. So I think what we learned from the conversations this morning is that this is not the future state in terms of AI. It's not even the steady state. We know that things will look very differently in a year, and 3 years, and 5 years. It's very unlikely in a period of such technological disruption that today's winners will still have 90% plus market shares and 50% after-tax profit margins. So I think investors need to be careful about understanding what they're buying and what they're willing to pay for that. And on the enabler side, the hyperscalers are deploying a level of CapEx that's really unprecedented. You're looking at hundreds of billions of dollars. And it's not clear what the return on those investments will be. Are they defending existing revenue streams? Will they create additional revenue streams? We don't know. What we do know is that these businesses that were famously capital light and attracted premium valuations for their capital efficiency are now very capital intensive indeed, and in fact are beginning to acquire nuclear power plants. So these business models are changing. When you pay a very high valuation, you need to think clearly about what outcome do I require for this investment to be successful. And I'll finish with just one comment which relates to a comment made by Uli in the previous session that AI remembers everything and stock markets famously don't. So if we think back to the internet bubble, I think a very good lesson for us to take away today is, in the end, the bulls were right. The internet did transform society, businesses, way more than any of us imagined. But if you paid the wrong price for that exposure, you lost most of your investment. And I think that's something investors need to be very clear about.
Thank you very much. To conclude this conversation, with so much change happening and happening so fast, what would your advice to our audience here be in order to help them be ready, them and their teams actually be ready for this new AI-driven era?
In Amundi, today, 70% of our staff have access to our proprietary AI and data platform called Alto Studio. Half of them use it on a weekly basis. And we've got more than 20 applications used by hundreds of users. But I still think we do not go fast enough. So Charlotte, you asked me about recommendations.
Absolutely.
So my grandmother, she told me that recipes should stay in the family. But today we are a family, so I will give some recommendations or some convictions I have. The first one is to give access to a secured AI platform to all your employees. A poll last week showed that 1/3 of companies have an AI platform, but 2/3 of the employees use AI for a professional reason. Cherchez l'erreur. 2/3, 1/3. Then you need to upskill your employees, the people, how to use AI responsibly. We spoke a lot about that in the panel before. First thing. Second thing is to deploy real applications. There are 2 words I hate. Proof of concept, use cases. Go for real applications and deploy. The third is to think about processes and changes before technology. For instance, we've got a successful application on compliance. Why is it successful? It's because we changed the way the marketing guys and the control function interact. The fourth is data management. I've been a pioneer of AI many years ago, and sometimes people ask me, how come it's good this time? How come it's big this time? 2 differences. One is the power of the chips, and you spoke about the fantastic companies that make money out of it. But the second one is the availability and the breadth of data. This is in our control to have great data. And then the last element of my grandmother recipe, it's partnership. Especially in tech, you cannot do everything by yourself and you should not rely too much on outsourcers. So how to find partners which at the same time combine security and innovation, that is the question.
Well, thank you very much. To wrap up, your advice, I guess, is to act quickly, act decisively, and don't do it alone. Yes. Many thanks to both of you, Guillaume and Barry, for your very precious insights. Thank you.